Three, two.
Good morning, guys. Welcome to another episode of Market Check brought to you by Because Bitcoin, that big yellow logo you've all become so familiar with now. I'm Tommy, also known as Snorlax, joined by Max, Tucker, and Will. As always, guys, we're going to be breaking down everything in financial markets on the charts and then any other commentary that we might have. Um, it's a day where we should probably prioritize the macro events of the week because as much as it almost kind of feels like they don't really affect price action on a day-to-day basis, at the very least, equities are the market with the largest amount of mind share at the moment. And you can see it, right? Small, mid, large caps ripping multiple percent today. Got the S&P up 0.5%. And as it continues, what looks like it's going to be an eventual ascent above the 4400s. Such a remarkable rally. When you really look back on it throughout the year, really just I'm kind of in disbelief at this whole year and how indexes price action has moved. We were just looking at the Facebook chart, the meta chart, and it basically looks like an up only TWAP since last October. Vice versa for the Qs and the S&P. I mean, I guess it's a little bit choppier on indexes, but still, these are some wicked looking charts that in the face of a very bearish market just continue to rip higher. And it's a market that used to care a lot about inflation, and I imagine if inflation ever does experience a wave where it flares back up, you're going to see the market start to care deeply about inflation again. But right now, when we have this persistent downtrend in CPI prints month over month, the market is going to be paying less and less attention of CPI. And I think at this point, you have to kind of consider the bid, not a bid anticipating a pause, but I think Will said it on our Giga Chad call this morning, which is that it's just a bid. And you have to respect it in equities at the moment. The flows are very strong to the upside. Even though we have seen, some great upside soon, I imagine, we'll probably get some sharp pullbacks as well. It's just kind of the nature of the equity trends, but I think they're for buying, at least until the picture kind of changes in regards to these inflation prints, as far as FOMC goes. Otherwise, there's no reason to just not continue expecting the norm from an equity price action standpoint that we've had all year. And it's even crazier, not to beat a dead horse, but to see this crypto weakness in the face of this equity strength, where we're so used to equity algorithms pushing price up higher in crypto and benefiting from those huge green days in equities, even when crypto wasn't having quite the same level of participation that equities were having, or that it even had in peak bull run. It's disappointing, being, somebody that loves to trade crypto, but, it's still, you have to sit back in awe and at the end of the day, find markets where you can achieve the juiciest returns, or where you believe that you're best suited to outperform. And the juiciest returns at the moment have to be in equities. I'm going to go ahead and get the discussion right into the panel here, because I want to make the discussion primarily about equities today. We can talk about crypto later as well. I'm sure we can talk about Bitcoin dominance and, this whipsaw that we just had. But right now, I really want to talk about equities because they're ripping. One in particular that we called out in our Discord was Alibaba, which is up about 3% today. So we're loving that. I'm rambling though. I'm going to go ahead and pass it over to Max. Max, what do you think about the CPI print and this just continued face ripper that we've seen in equities all year?
Yeah, well, I'll say this. I had some SPY calls from last week that you guys know about. I also had some Russell calls, which I haven't even checked the Russell today. Let me see. How's the Russell doing? Ooh, okay. All right, we're up a little bit. We're up a little bit above Monday's range, but I'm a little mad I didn't leave some exposure on. I closed them out. I mean, here's the thing. I had a full TP on them. I was targeting the August 2022 high, and we got it, and I took a full TP. I should have left some on. I would have made a little bit extra money, but how am I feeling about the face ripper? I'm impressed. Um, at this point, I'm not that surprised. The writing was very clearly written on the wall. As we exited Q1, it became pretty apparent what the playbook was going to be, um, and here we are. So at this point, I'm not ruling out significantly higher prices. Um, Throughout history, and I wrote a premium report for our group on this. Um, it's sort of like the psychology of these double tops that we've seen throughout the S&P 500's history. And we had one back in the like the 70s to 70s to 80s. We had one in the the dot-com bubble that led into the housing crash 2007 to 2009. And we have these sort of like they're like lower time frame liquidity runs, but they happen over like 5 years instead of like 30 minutes, where you basically take out both sides of the range, like the extremes on both sides. You test the supply side, you test the demand side, and then finally you naturally gravitate back towards your equilibrium. Or like more like harmony within the markets after basically screwing both sides. And I mean, last year the Bears got screwed. Or I'm sorry, the Bulls got screwed. This year the Bears are getting screwed. And if you've remained too convicted and you haven't been able to pivot, no pun intended, you've gotten just tossed. I mean, it's been terrible for you. But even for those like myself that they lean really high time frame bearish. And by the way, I do still lean very high time frame bearish. Um, there's no reason to stubbornly protest playing some upside and picking and choosing your spots, which we've been doing quite well, and we've been having a lot of fun doing it. What do I make of the CPI print? Well, I'm going to copy something that Tucker said this morning in our Discord call with our group. If you're bullish here, this was just about as perfect as it could be. And I happen to agree with him. I think you came in soft where it's very bullish short term, but you didn't come in too soft where everybody starts panicking about deflation and the Fed having to slam on the brakes and, start issuing cuts immediately because we're entering some like extreme deflation, which of course is horrible for markets and really everything. But I think we sort of threaded the needle again, and I think that there's no reason we should sell off today if this is going to be bullish. Um, from a technical perspective, the S&P 500 or SPY specifically fired right into its last gap on the chart at 435, which by the way was a level that we called out. I was talking with Wayne in our Discord about this. He said, "Max, like gun to your head, are we hitting that level?" I said, "Yes." Unfortunately, I sold at the August 2022 high. I didn't capture the last bit of that move, but from a technical perspective, we filled in the last gap or last high time frame inefficiency. But I would still think that there's probably room for us to run. And again, if you look at the Fed Watcher tool, for about the past 30 days or so, the market's been pricing in about between 65 to 75% probability of a pause at tomorrow's FOMC meeting. As of this morning, about an hour ago, it was at 93%. So it's all but a foregone conclusion at this point that the Fed is going to be done. And I'm also not in this camp that they're going to just like pause and then resume hikes after taking like one meeting off. I think they're going to paint that picture tomorrow, and I think that they're going to be like, yeah, we're data dependent and whatever. That's their thing, that's their spiel. But I think when they pause, I think they're going to be done. Um, Especially if that's paired on our next CPI print with another decrease. That then I get. I was gonna tweet this out this morning, but I wanted to just sort of like think about it a little bit more. But what's happening right now, is I'm seeing a lot of people on Twitter, like the perma bulls, the very loud bulls. They're coming out and they're cheering on, how fast CPI is dropping. Like, oh, like the bull market's back, CPI is dropping, here we go. And it reminds me of what like the crypto bulls were doing in 2021 when they were like cheering on inflation and money printing, and they're like, "Yes, hyperinflation's coming, buy Bitcoin." But ultimately, that very thing that fuels your rally, whether it's up or down, ends up being the one that turns around to stab you in the back. So, if we yes, we don't want inflation. we don't want too high of inflation, but we want some inflation. If the Fed has over tightened and you continue to like cheer this on and not potentially see the signs of deflation creeping into the market, the very thing that sort of fueled your bull market, which was we conquered inflation, um, could actually be the one that reignites a bear trend the following year if it perpetuates too much further and accelerates too aggressively. So it feels it feels like the exact opposite of what happened in 2021 to me. It's like we're basically just like undoing it. Like we took such I don't know if there's like an economic theory about this, but it's maybe it's just like market elasticity or like mean reversion. But it's like when you have too much of an overcorrection one way, whether it's up or down, you typically get the exact opposite in terms of a correction. So like you have a major hyperinflationary bubble, then you have like a deflationary crash to sort of like even the scoreboard out a little bit. So we'll see. I mean, we're threading the needle for now, but yeah, I mean, I think in the short term, most certainly we should continue up. I mean, if we end up getting stuffed here today or something like that, yeah, I don't know how I would interpret that, but we shouldn't get stuffed. I mean, they have their fuel. They most definitely have their fuel. Those are my initial thoughts. Happy to be here. Looking forward to the conversation. I guess I can kick it over to who wants to go next here. Anybody wanna? We'll go popcorn Tucker.
Okay, yeah, I was gonna say I can go. Yeah, I mean, like you said, and like I said earlier, like everything is set up in the Bulls' favor after the print today. So, um, I mean, there's no reason we shouldn't just have a face ripper today. There's really not. So, I want to see this continue. I've got a little gap in the chart, just more an inefficiency up at like 43.80s, 43.90s, basically. So I want to see that tagged at least, but I mean, I think the wrench that Powell could throw into this is this like idea of a skip, right? Which if he comes out tomorrow and says, "Yeah, we're not going to hike, but we might look to, our policy will be data dependent," and like basically says like we could hike at the next meeting if the data dictates, right? That would throw a wrench into things. Because a pause implies that they're done and implies that they're probably going to be cutting in like 6 months, even though he said higher for longer. And I'm looking at the meetings probabilities deal on the Fed Watcher tool right now. There's still a 60% chance that they hike at the next meeting right now. So people are buying into this idea of a skip. I think that was floated out by Fed speakers or Nick Timiraos before the blackout period or something like that. But it would throw a wrench into things. I don't know how the market would interpret, language like that. For me personally, I think even if he says that, I think they're done. If he pauses tomorrow, I think they're probably done. I don't know what sort of data would dictate them to hike again. I think just given a little research and estimates I've seen that we should expect another chunk down next month. I think they're looking for like 3.2, like another full 100 basis points off. So, yeah, I think if he pauses, they're done. But that being said, yeah, I mean, everything is set up in the Bulls' favor. I want to see this close above like 43.80. If we close today red, or if we close tomorrow red, that's a big, no pun intended, red flag, right? Like that's a big red flag, because if the market can't keep going up on good news, and this is about the best news the market could get, then I would be, possibly looking for a top to be in, if that happens, or at least room for probably a retest of like 4,200 minimum, right? I don't know if that's going to happen. We'll have to see how the day closes now. Tomorrow closes and what Powell says, but they hit all their marks today. They hit their mark on on CPI. They hit their mark on core. They hit their mark on month over month. Like in recent months, they've been hitting all expectations across the board. So um, it's best not to fade the consensus, I think, from here on out, because at the beginning of the hiking cycle, they were missing. They were missing by a lot. And now I think they've got it down pretty. We all know it's probably somewhat of a made up number, right? Like they probably just kind of Powell wakes up and he's like, yeah, we're gonna go with 4% today. Like,
They can massage it a little bit if they need to.
yeah, Powell's like,
Yeah.
we're gonna make this just in line with expectations. So I think that's been the trend. I think that'll probably continue. So I think if they expect 3.2 next month, they'll probably get it. But yeah, I was looking for, if we got a 3 handle today, maybe more like a 3.8, 3.7, that would be cause, I think, for a big sell off if we got it. But obviously we didn't. But I don't know. I think, you know, beyond the next meeting, I think that's where, many people have said that's where they think it could get sticky, is that like 3.5 to 3% range is where we could start having trouble uh, chunking off inflation. Um, so I don't know that, I mean, especially for the bond market, that's where it'll get interesting. And that's something we can talk about too. Because we're seeing TLT and TMF kind of, get nuked today. TMF's down 3%. I don't know what, I'm sure TLT's down a little bit. Yeah, down about 1%. So I couldn't really tell you the reason for that. I mean, I guess we can speculate, but bonds given a 95, what is it? 96.5 per probability of a pause tomorrow. Not 100% sure why they're not catching a bid today.
Did you see what XO's target was for TLT?
No, I'm scared to ask. What is it?
I think it was like 89.
Oh dear. What is that? Just range low? A little deep.
A little
double
bit
bottom.
deeper.
Yeah, a little like yeah, he's probably looking for like that, maybe a nice bold div, and then yeah, I could see it.
I like XO, but like, man, that seems a little extreme. I'm not gonna lie. We already dropped below the 30, the extremely overbought zone. I can't see us revisiting that.
Yeah, because you gotta, especially with bonds, like I understand, like you can pretty much chart everything, and the technicals work. I understand that well, but like you gotta incorporate a fundamental. I mean, and that's the thing, he does, right? He incorporates macro into his analysis. So I would love to know what he's seeing that would send TLT to 89. But
Same here for sure.
but I don't know why. I mean, it could be true, right? Like I couldn't tell you why bonds are down today. I need to figure that out. Because from where I'm sitting, they should be catching a bid. But yeah, I'll do a little research. But yeah, that's what I've got. I mean, we can get into more technicals, but I'll kick it to you, Will.
Yeah, I mean, let me share screen real quick in a second. So I mean, I've got quite a few different things like that I'm kind of looking at across the board. So it's funny enough, I just started looking at currencies a little bit this morning while we were having this discussion. It seems like every currency is down against the dollar. So I find that very interesting, except for the pound, right? Seems like the pound is outpacing the dollar. So now it's something that, I want to be kind of looking at and see why the pound is outpacing the dollar. But I would assume that the dollar is probably outpacing just based purely on the fact that, markets are ripping. I think people are investing in the US and so on and so forth. And we're seeing that those investments flow into a lot of stocks and stuff like that. TLT is an interesting conversation for sure. Like I said, I don't know like what he's looking at specifically. I just kind of looked at TLT more or less as, everything was there. We had our puke moment, right? Our puke moment was this. So we had our drop, then we had our basically accumulation to the high, which is basically a bear flag. From the bear flag, we broke down, hit our low, bounce. Now here's the thing: this bounce was meant to break down. Why? Because again, is it another bear flag right here, short-term bear flag drop? And now we're kind of in a sideways accumulation zone. So it kind of makes me look at TLT more like it's more accumulating than it is, looking to roll back over. Now I could be wrong. It could be a distribution and maybe round top, right, like that, and then come back down. But I would figure it would be it could and this is probably what I think XO is probably looking at is a deviation low. It's just once you visit these lower ends of the RSI, on a higher time frame, you tend to not want to come back and revisit that on the RSI again. Now, could it deviate low here and then end up at a higher strength zone? Sure. If that happens, then I would say that's a bullish div and that you're looking to bid off of that move. So, I can see that if that's what he's looking at specifically. If not, then I would be really interested also in kind of knowing what his thoughts are behind that. As far as stock market goes, man, like everything's ripping. Like we talked about Q's a week, 2 weeks, 3 weeks, 4 weeks ago, and I was just like, man, I was like, I bet they're gonna bid this upper range here. And I mean, it's looking pretty insane. And lo and behold, that's exactly what they did. And I want to get to DGI for sure. I think that's a really interesting play there. I thought I had Q's up. Maybe I didn't. Where's that? There it is. Okay. So this was a zone I was looking for specifically, and it was this area right here for them to come back and try and recapture in price. I don't know what's up with my paint brush, but it's not working. So expectations where they come back to this zone right here. They came down, hit. I said if they broke above here, they'll more than likely go for this high here. Because if you look here, from here to here, there's really no resistance in here, right? So the likeliness once you get above this breakout zone, you can see it too. They had to build up to it really heavily, right? But once they got above it, it's just big candle, 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 candle. It's just ripping straight up toward it, right? Because there's no resistance here. There was none. And that's why I was like, okay, they got to get across this finish line. Resistance, 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 resistance. Well, support, sorry, resistance, resistance. And you can see the clear resistance here, right? So they came up, they tested, they failed, they came down deeper to create the momentum to build back up. Then they stair stepped, right? So they came up, they double bottom, then they did the lower or higher low. Then they moved another higher low. And they were sitting on top of each liquidity zone, right? So this liquidity was sitting on top of all this right here. This liquidity was sitting on top of all this right here. And that's why I identified all these areas as we were moving. And I was like, all right, if they get above here, they're going to bid this thing all the way to here because there's nothing here to block them. There was no resistance up to that point. And that's exactly where I think they're going. I think they're going to hit 372, 371. And if you are able to get above this, great, but you're probably going to see a pullback in this range. So trying to bid above this is not a smart move. I think you get a pullback, probably back down to like right about here, which is going to pull us right into here. Grab the last little bit of liquidity out the support here, resistance here, right a bit over here. Come back over here. People are looking for much lower prices. They then pull off that. They move out. They break out. They hit all-time high. Boom. We're back at ATH again. And then potentially we get deviation highs, just like on NVIDIA and so on and so forth. I'll be interested to see where they go with that. I think Russell's the best looking one out of all of them. This is something we talked about, well ahead of this current move. As far as upside potential, right? When you're looking at these bigger ETFs, bigger indices, so on and so forth, you're looking at, things that are undervalued versus overvalued. So this is still undervalued. If you weigh this against something like Q's, you weigh this against something like there was a couple other ones that we were looking at too, DGI and so on and so forth. This is the underperforming stock or index. And then I would say even SPY in a sense is still, even where it sits the underperforming index against something like Q's and so on and so forth. And we can see a very similar, I got a lot of stuff on my chart, so sorry about that for the crowd that's probably watching, but I like to kind of spec out all my moves while I'm watching them play out. And it's just because I want to be prepared for every possibility, but this is a very similar playbook to the Qs, right? So if this ends up bidding, like I think it will, you're going to come for the same thing that the Qs came for. You're going to first come for that high right there because there's nothing here. There's nothing here blocking you, right? Like price can only run straight up to here. And then you've got a resistance here based off wick. And then the only thing you got right here is a pullback, a very similar move. Tell me this doesn't look identical to Q's. Look, same pullback zone right here. You're pulling up, you're pulling back, you're hitting, you're coming back up, you're hitting ATH right there, right? And it's the same exact play as what's on Q's. I can show you identical move right over here on Q's, as what I just showed you on SPY. You come up, you hit your top high, you come back, you hit the same low right here, right? And then after you hit that low, you come up, you break out, you hit highs. It's very insane how these charts are exactly identical on price. Or at least as far as how they move. They all kind of moved and way together, even though they hold different types of stocks. So something very interesting. Another one too that I was talking to Max about was Tesla here. I think Tesla's in a wave motion. So you get your 1 into your 2 into your 3, your 3-wave high. There's really nothing resisting Tesla all the way up to basically 300s. I think this right here was the capitulation event. This is where they basically puked. They basically recovered the entire capitulation. From there, they might pull back, and I have it at 4 to here, but they could pull back much higher, and then pull out the 5 up to here, and it looks very similar to DGI, QQs, so on and so forth. One other thing I wanted to point out too, and this is something I was watching. Here's CRC. This is something we've been talking about for a while, Max. Kind of keeping it in the down low, but we'll throw it out here for them today. So this is CRC. Now here is 9, right? Different stocks, so on and so forth, but this is energy. And this right here is resource corporation, essentially same stuff. So if you look here at this distribution zone right here, you look at this gap, you're like, man, they got to come back and fill this, right? If you look at 9, they did that, right? So 9 did a very similar move. And I was looking for a comparable chart. So this was a perfect one. And they basically distributed at range highs for a while, like years. And they're kind of doing the same thing here, distributing at range highs. And I'm fully expecting them to not at all go this way, but to come back and fill that gap, right? Now, on that fill, you could short, and then you could basically long this position from there, right back up as a rebound play to resistance, right? So it's a very interesting move here. And I think that that's exactly what's going to probably play out for CRTs. They're going to pull down. And this is going to be a crazy play. A lot of people are going to miss this. But this will print. This will freaking print. It'll be a pullback to here and then a move back up to rebound and recover liquidity again. And then you're going to be like this, right? For like a long period of time. You're not really going to break out or break down. You're just going to be like this, bouncing between the two liquidity zones until things rebalance, and then you'll kind of move out of the zone. Right? So I don't want to take up the whole show myself, but I have a lot more, but we'll cover it moving forward. That's more crypto related. So I'll kick it back to you, Snorlax.
No, I appreciate that, Will. No, I mean, what better way to go through the show than to just kind of walk through some of the individual plays that we're looking at right now, right? We can talk a little bit more about that bonds trade if y'all want. I actually did find the EXO tweet. It was targeting 88.7 TLT, which I'm not sure what that would be on TMF. Probably, I would guess around 5 or 4.5. I think didn't Candlebox have around that target, Max?
It was one of his guys. It wasn't Candlebox. It was
Charting Bot had 3.8.
Oh man.
What date was the EXO tweet?
But that was just on the lines 5 hours ago. He retweeted one. He tweeted in May, but it was today.
Gotcha.
All right, let's
Oh,
see.
who did? Who tweeted today?
EXO.
Oh, yeah. He posted about TLT last week, and I was looking at the chart, and I'm sorry, guys. I felt like I had to trim my bag, even if there's a fundamental case for it. I think technical wise, or the technicals, I would rather wait for some breaks to the upside before I start longing again. Like 7.8, I have it's a pretty big level. We were to just break through that and can hold that level, then I think we would probably rip a good bit higher. But I mean, right, I don't know. If he is going to pause, though, it makes, I don't see why people wouldn't be bidding bonds right now. Tucker, I'm with you.
I think it's core, right? Even though core hit expectations and came down, just looking at wait, can you see my screen, Max or Tommy?
Let's
Yeah, so I'll just pull this up, but just looking at the, this is my little chart of not chart, but list of yields. Obviously the front end is getting bought and the long end is getting sold. The front end is controlled by the Fed, and the long end is controlled by the bond market. So it looks like the bond market just isn't buying that core is going to keep chunking down. Because that's, I think, what they're really worried about over CPI is core. So, I mean, core hit expectations, and I think it was like 5.3 it came in at, but it's still at 5.3, right? Which, is not a whole lot of progress. I think it's also probably the fact that there's still a 65% chance of a hike at the next meeting. And I think they probably just don't want to get like jerked around by the Fed. I think, I mean, those yields are going to move a lot tomorrow when Powell opens his mouth, but I think the bond market is just, since they've been wrong so much in anticipating cuts for the last like year, I think they're probably just skeptical of whether or not this is a real pause and inflation is really going away and whatever. So I think they're selling off a little bit, but yeah, I mean, like if we just real quick, if we came down to 87 on TLT, that's a 13% decline. On TMF, that would be 3 times that. So we're looking at about 40%. So you're looking at like 450 is basically what I would say on TMF. But I mean, I see obviously he put it on the chart, but I see the line that he was talking about
here's my
here.
here's what, keep your chart up, Tucker. Every single global bottom in long duration treasury bonds in the past 2 decades has been a double or a triple bottom. I'm finding it a little bit difficult to imagine we like capitulate further from here because I don't think yields are going to make like serious new highs. I could absolutely see a sweep of the low though. And that's what I keep telling our Discord that my plan is. Like they know I've already been accumulating basically from like 750 all the way to like I'd say my highest purchase has probably been like 830 ish, 835. So I've been kind of accumulating in this region for TMF, and I'm maybe about like half sized. My last orders will be on a double bottom. Um, Here's the thing too about TLT and TMF. It is a 3 times leveraged. TMF is 3 times leveraged TLT. It's not perfect. Like I think that if TLT went down and did a double bottom and like a sweep of that low, or maybe it goes to 87 and it's a little like a deep sweep. TMF down sub $5. Ooh, I don't want to say can't happen, but I'm just a little skeptical that we're about to see like another capitulation in like the long end. I really am. I don't know what would cause like an actual capitulation from like a technical perspective. Going down and doing a double, what is performing the double bottom? What is it telling you? Like what's the purpose of doing that? Well, the purpose is to really test demand. Like let's send it back down there. Let's see if the market is actually convicted enough to hold that level. Let's see if there's demand for the long end down there. I just don't know what's going to actually cause another capitulation after this like long consolidation here. I don't know what it would be. Not that it can't happen, but I don't know what it would be. So, what's going to send yields soaring to new highs? And of course, then TLT like actually sitting at new lows, not just like a sweep. I don't know. I'm a little skeptical, but for me, it's like I'm fine buying here with moderate size, and then really scaling and aggressive if we do sweep the low, wherever that is. But yeah, I mean, if
I
TMF went down 40%, that's gonna fucking sting. I'm not gonna lie, even in the short term.
I could see where he's getting it from now too. If you were to just scroll out a little more on TLT,
The monthly.
Tucker. Nah, you can even stay on the weekly. I would just use the weekly. Yeah, yeah, monthly looks good too. Yeah, either one. So see those lows where you have support right there, 87.7.5. That's what he's thinking they're gonna sweep. He's in there. He's in there to sweep those lows right there. I think,
Yeah.
and that's just because they broke structure. Right, they broke every single structure on the way down. So the only support here is that support from here. Right, like you're right now sitting underneath resistance again of the previous low. So it's pretty crazy.
It should like massively bounce though from that level.
Yeah, it's gonna rebound really fast off of that low. And if you look at throw up your volume real quick. I found this really interesting too. Look at your vol ramp from like the beginning.
Yeah.
Keep scrolling out more. Look at your vol ramp. Like it's pretty crazy. Like you are catching a bid here, but like I don't think it'll be enough to keep it from hitting that support. I see what he's looking at now. Like it took me a minute. I had to scroll out to really look and view that, but like that is a perfect support. Look at how that's a triple bottom right there, and they're coming back to retap that triple bottom.
Yeah, because I don't know why it bounced at 91.
A lot of things did. A lot of things bounced in the middle of the air, and that was just. I'll tell you what that is. It's normal. So what that is that's your traders coming in and they're scalping the bottoms out, right? So a lot of people are targeting the lows out the first move. They scout the bottom, squeeze them to back up to the high, and they come back for it later. This is an atypical move for a trader move. So I think that's exactly what occurred here. They came in, scalped the bottom, kept them from catching their target low, and then now those people are leaving their positions, aka giving them a better ROI to look for that low again, and then they come back down and they catch that bottom on the next bounce down. I didn't even see it, man, like till I like really zoomed out and I was like, oh dude, that's what they're going for. Now I see what he's doing. And you can look at the RSI. RSI is telling you all day. Like RSI is like a cliff drop off. It just keeps dropping.
Yeah.
Right?
Zoom out, Will. We're so early.
Yeah, I know.
That's what you want to see.
So
Look at the
early.
RSI, man. It's like drop, pump, drop, pump, drop, pump. It's on the pump right now, and it's coming back into the drop. Look at it. The RSI.
Yeah, you want to see that bull div somewhere like
Yep,
that.
exactly. That's what I think we're gonna run
Screenshot
into.
that post. I bet it.
That's exactly
what you want to
yes.
see.
Yes.
If
that
you
is
set
exactly
a
what I
lower
think.
low, you can't set a lower low on the RSI.
Correct.
You gotta get a bull div.
Yep. That's exactly what I was saying earlier. It has the bull div from here. So you're just looking for the bull div is all you're
If it sets a lower low on the RSI, then I seriously wonder where it's going to be trading.
Yeah.
I have a 98%. I'm not even going to say 100 because I know how that is. A 98% confidence that is not going to happen, and it's going to set a lower low on the RSI.
Right.
I think it'll look better on the weekly. Probably it'll
100% it will. It'll come back down. It'll revisit the 30 and bounce out the 30. Watch with a lower low on the chart.
It's cool with me.
Yeah.
Everything this year has been playing bull divs on the weekly. Everything has.
Ball. Yep, I could see it.
And it'll trade up to like 130, 140 probably.
Consolidate and start moving.
Yeah.
Now what fundamentally gets us to 87?
The chart.
Yeah.
Positioning. I heard I didn't hear it, but I read what the alpha mentioned that before, like the positioning in bonds is still like pain trade lower or something like that. And I mean, momentum, of course, as well, like Will was saying, is really strong to the downside. So, I don't know. I mean, that's not really like a great fundamental reason necessarily, but I'm sure we'll get something that makes more sense. The charts are just kind of like predicting the move ahead of time.
That's an insane move. Let's try and let's weigh out what yields would look like against that if that's what's going to play here. What are we thinking on yields?
Yeah.
I mean, you would think that they would at least double top, if not form like a bear div at a minimum.
That's the 20-year. That's TLT's yield.
Bro, that would be insane. Get back up to almost 5% again. Oof.
Yeah, you'd have to maybe get that.
And then RSI would still be lower too. Yep.
Yeah.
I could see that. I could see that. And you got, if you look at it from a higher time frame, you got basically an inverted head and shoulders, kind of in a sense, not really, but you got the lower high left shoulder, lower high right shoulder on the RSI, and you got the high peak middle there in the middle, right? And
Well,
you could see the div that played out from 22 to 23. See that deviation right there, where you basically had higher strength and lower price, and that was calling for the bounce here. And then we bounced up off of that. And then now you fell back below that, right? And now you're going to come back up to revisit the high. You'll probably hit the 70 is what I'm thinking on the RSI. You'll
I
probably
mean,
hit the 70 on the RSI. You'll form kind of a double top or a higher high on the yields.
it's literally just like market structure, right? It's just like ramp up, chop down. That's probably what we're gonna see. Just up, chop down.
Yeah, it's pretty crazy, man. Yeah, what would a 2 year look like? That's the real question.
Yeah. Wow.
What would that look like?
6%.
That looks like a honeypot.
Oh my gosh, it's crazy, bro. Oh, that's a 2 month, isn't it?
Oh yeah, that is a 2 month. My bad.
Bro, look at that. What's the volume look like on that?
Oh, they won't give you volume on the yield. Hang on.
Oh, that sucks. All right.
It's that level 4 data.
Level four.
No volume data.
No volume. Okay. Yeah, never mind.
Yeah.
All right, let's go 2 year. What are we looking like here? Can we get an RSI on that?
I bet it is just stupid. Oh, I
There
thought it
we
would be more
go.
bullish than that, honestly.
All right, draw a ceiling on that RSI. Just like at an angle.
Oh, you
Angle,
need
angle.
line.
Yeah.
Yeah, you kind of got like that.
You got room. You got room.
You got room.
Yep. You have room for upside. So you could honestly now draw a trend line angle. Draw a trend line angled up on the chart.
Oh, on the chart.
From the highs. From the highs.
What are you talking about?
Yep. No, other way. Down to yep, right there. Yep. That's what you're looking for right there. And then the other one straight down on the RSI.
Yeah. X marks the spot.
No, now draw the trend on the RSI, and that's your bear div.
Yeah. Yeah, that'll probably play. We are getting the steepener also. We are getting the bear steepener. The 10-year minus the 3-month.
Mm-hmm.
What is that?
It's
You
looking
guys are literally like speaking in a different language right now.
the bear steepener. This deal.
Oh, wow. Jeez. Can you imagine the meaner version if TLT goes to 89 and Qs go to I imagine in that case 390?
I mean, we are 100%. I'm not even gonna BS. We are setting up 2008, 2009. I think we're a year or two out before that happens. But we are 100% setting it up for that.
We did 15% after the bottom was in on the steepener, and we did this the other day, or Max and I did on a market talk maybe a couple weeks ago. It basically implied 46. If we copy 2008 exactly after the bottom here, it implied 15% move up to 4,600, and then a 57% nuke is what it was to 2K or something like that, 2,500.
Man, I don't even know. I don't even want to know what Bitcoin does if 57%.
Yeah, but in 2001, it was we were already in a downtrend, and we just kept grinding down for the next.
Well, run the 10 and the 2. Actually, just let me grab chart real quick if I can get it for a second.
Yeah, it almost feels like we're, and I've talked about how the Qs kind of feel like that double top on SPOOs from 07, 08, but it almost feels like we're speed running that grind up because of the like our financial conditions
Yeah.
kind of dictate a more volatile and parabolic looking trend. And that's true for both like directions.
Can I borrow the chart for a minute there? Or the screen?
Yeah, go ahead.
So kind of like how you were setting up originally. Um, so right here's our 2000, our .com bubble, right? So this right here is where we kind of started into the .com bubble. It's your 2000 drop, and then over here is kind of where you took the hit, and then same thing over here in 07, 08, or sorry, 08, 09. So you started to get the yield inversion over here in 07, right? And then you pulled out of it and you started getting hit over here in like 08, 09, right? So every single like recessionary scenario has been after you pulled out of the inversion. Usually about 1 year out of the inversion. And right now we're still kind of sitting in that inversion. So like for me, the big move comes after the uninversion happens. That's what I'm looking for. And usually you get signs before these things occur, like over here in 07, for instance. You got the first signs of it over here in 06, right? Over here where we're at right now in 2023, we got the first signs of it in 2019. You got that first div right here, kind of pulled down, ripped up, and you're kind of like, okay, we're going to go into a super cycle scenario here, which is going to occur into the drop, and then boom, we're going to hang out down here, and then we're going to pull out. Same thing here. .com bubble was kind of initiated and started out over here in 97, right? And then from 97, it pulls into 2000, boom, drop, and then you get your recessionary period. And then same thing over here. You get your, and this one came quick, right? Because you had it like right before the drop. Then you had to pull out and you had the breakdown of the market right over here. It is going to occur. 100% the market is going to get completely annihilated. It's just going to occur after the uninversion happens first. So that's why I'm not scared to play upside, because as long as we remain in this area, the market can remain euphoric, the market can remain in an up-only state, right? And even a little bit after we come out of the inversion, like you don't have to get out before the inversion happens. Even a little bit after you come out of the inversion, you'll start to see that topping of the market, right? You just need to get out before the actual drop happens, because when that happens, you're done. Like you're gonna lose stupid amounts of capital. This is where they soak you in the market right here. And I think even a lot of
Hey Will,
bulls
can
understand
you
that.
put like SPX on there as well so we can see? Is that possible?
Yeah,
Is there
you
enough
mean
room?
add the SPX?
Yeah, yeah, just so we can see the price overlaid for those time periods.
There, let me try and
Yeah, you can see there's a
let me
negative
clear my chart. Hold on.
you can see there's a negative correlation there.
Now see right here where the S&P bottomed here.
Yeah.
So right here's your 2000. This is where it's telling you, oh shit's about to go down. And then from here, you kind of start to get that bottoming, right? So you get the uninversion, as you can see right here. As you're starting to unvert, you're starting to unwind capital to the downside. You get that big run up. It occurs in the dip. Same thing again right here, right? Occurs in a dip 0607. Right there, boom. As you start to uninvert, you start to unwind capital again, right? So basically, same thing over here is what I'm anticipating. Look at this massive run up. It's crazy. But look, you get the drop, you get the bounce, right? And you're getting a second drop. And in that second drop, you're pushing up again. But as soon as this drop starts to go back the other way, this shit's going to start tanking, right? So even if you're looking at this from like, hey, I need to start, getting into the market, so on and so forth. I don't know if that's necessarily the best deal where we're at right now. Like you have room for upside, but this thing could definitely wreck you if you come into this thing at the wrong position, right? The uninversion position. Once you start uninverting, the market starts unwinding capital. And that's where you're going to start seeing that rotation back into bonds, right? That's why bonds are running. And you're going to see that rotation back out of assets. Now, a lot of people are like, why would you buy bonds? It's just something that happens. The market does it. It
Can you
hedges.
throw a TLT chart on there as well?
Yeah, also just real quick, the uninversion is a function of the 3 or the whatever you got on the 2 year getting bought or the 3 month getting bought or the 10 year yield getting sold.
You might have to put that on a new price
Yeah,
scale.
it's the rebalancing, right? So
Yeah.
when the 10 and the 2 cross each other and the 2 starts outpacing the 10, that's a problem, right? When it rebalances, the 10 gets above the 2, and then you get that uninversion scenario that happened. Which would you say TLT, right? Oh,
Yeah.
let me fix it, my bad. So that's kind of your new price scale right there for TLT. And you can see TLT is getting wrecked based on this. So if we're looking for more downside, we're looking for more inversion, then yes, TLT will continue to get wrecked.
Is there a way you can adjust the S&P 500 now? You might need to add a new okay, there you go. Yeah. Okay, let's see. So uninversion begins to happen. TLT catches a bid.
Let's see if I can get this a little further out. There we go. That's a little better.
Yeah, so it looks like once the uninversion really starts to happen is when you see the long end really getting bid.
Yep.
Well, and the uninversion happens because the long end gets bid.
Yeah.
Right.
Yeah. The 10-year gets bid over the 2 also. So like you start to see things even out. The long end starts to get bid, it starts to roll into the 10, and then that starts to affect the 2. 10 starts to go down, but the 2 starts to drop even more rapidly, right? And the 2 gets below the 10 at that point, and then at that point you've got to rebalance.
It can all be attributed to a function of probably, I guess, in current conditions, inflation coming down, long and getting bid because of that. But also, I think it all rolls back to rate cuts, right?
Mm-hmm.
When they start cutting rates, the long end will go parabolic, the uninversion will steepen, and the market will nuke. And that's the relationship.
Correct. Yeah, that's the asset rotation that people realize. They like a lot of people are thinking that everything goes back to normal and we just continue to bid like 2010 to 2020. That's not what's going to happen. We're going to get completely obliterated once this uninversion occurs, and then the market will reset, and then we'll get a 10-year run probably after that. So the reset that everybody's looking for, the reset now. The reset doesn't occur now. It occurs after the uninversion starts to occur. That's where the real reset starts to occur. But if you get caught in the middle of that, you can see some serious degradation on your positions, like just seriously annihilation to whatever you're sitting.
Sounds like if you time it right, you don't even need to worry about shorts. Just worry about timing the bonds trade. It's effectively
correct.
Short on these.
Yeah, this is the one key thing that I look at specifically out of everything out there. Once I see the uninversion start to occur, I'm like, I don't care how high the market can go. I'm cutting my positions. I'm waiting for the market to reset.
Yeah, well, that's the thing. You can either front run this by getting long bonds or getting short the market. And the issue, like the pro con is so in favor of being long bonds with spot, right? Rather than having like options on, rather than having like puts, you know what I mean? Like you add the puts when like this is all confirmed and done and they're cutting and the uninversion is, everything's going the right way. But like if you want to front run it now, it's spot TLT, spot TMF.
Right. Yeah, that's what I'd be doing all day. That's what I think all of us have really been doing. We've all been bidding TLT 10, but TMF, even where it sits, like I'm not worried about downside, to be honest with you. I think that stuff will print later. So
yeah, I think as long as you leave yourself the opportunity to bid a potential double bottom or sweep of that low, I think it's a relatively conservative play. It's just the timing of it. You have to be comfortable being in, potential drawdown for 6 to 9 months on a like a multi-year swing trade, And I think that it'll probably come to fruition. Like my gut's telling me Q2 of next year we'll start to see this thing go parabolic, but I mean that's a long ways away. It could be a year.
yeah, like I said, these things tend to occur like 1 year after the inversion comes back up between the 10 and the 2.
Mm-hmm.
So if you just watch for that 10 and that 2 uninversion, then okay, I need to start being really cautious about my positions and understand I need to start cutting if price starts getting below a certain point. You don't even have to like fully exit. Like a lot of people think, oh, okay, well, I'll just cut everything. No, just set stops on everything. Literally, just set, once you get stopped out, don't re-enter. You know, just like literally just sit there and stay in
I
your
I
stop.
I don't know about not re-entering when you get stopped out though. Most I will say
No, I mean
the
on
premise
spot
is the premise
positions.
is the correct one because you don't want to get into like a state where you're martingaling, obviously.
Yes.
But I've often found, and it's almost kind of a meme, right? That your invalidation is like the perfect entry for the trade. So like this morning, for example, I've been running that Bitcoin dominance trade. I got stopped out of like a chunk of like some small percentages of some alt positions that I was in. I immediately re-entered and then it nuked about like 30 seconds later. So I agree with you though, Will. You never want to martingale after the market's kind of like proven that your invalidation is wrong, but I think there are exceptions too.
Yeah.
Here's
No.
what I want.
I,
I want to comment on that quick. Some of my
Mhm.
best trades ever have been martingales. I'm just being completely honest. Like some of my best trades have just been like a refusal, like a literal stubborn refusal to get out of a position because I'm that convicted I was just a little off on my timing and I just stick with it and just average in. That's how I'm feeling about TMF, by the way, guys. Like, I'm going to martingale TMF if we go down. It'll be strategic. It's not going to be an emotional martingale, but like, I've got my levels, like, I've always known a double bottom is possible, if not like a deviation of that low. And at that point, I'm going to be in with like half my net worth on the long end. And it is what it is. It's going to be fine because I'm convicted in how it ends. But yeah, I don't really have an invalidation on TMF. Like I really don't. I don't have an invalidation at this point on the long end. For me, it's maybe more of a time based invalidation. Like if 2 years from now I'm still sitting in it and it hasn't popped, then I might be like, all right, the opportunity cost of sitting in this thing with full size for 2 years is just not making sense anymore. Not at all. Um, but I mean, hopefully at that point, we're in some sort of new like frothy environment where rates have dropped and the money printer's back on. And I mean, I'll be full time back into trading crypto, which I haven't really been this year too much. Um, but yeah, I mean, some of my best trades have been, really just like on something I'm very high conviction in, just throwing money at it until it works. But it's dangerous, it's a slippery slope.
You only call it martingaling if you're oversized. If you're undersized or just right, it's just called scaling in.
Tommy, I
What
want to ask your thought. Sorry, Will, you can share this first. I want to get Tommy's thoughts on crypto though, because Bitcoin's
okay,
kind of
yeah.
puking lower time frame, but I'm not sure how I feel about it quite yet. But
I just wanted to point out this one thing real quick.
yeah,
Oh, so it, just for context, historically, SPY does these, right? Same thing here. 1, 2, 3. Same thing here. 1, 2, 3. And I would arguably say, even up here where people think that we're going to run into some kind of new bull market, once SPY pulls back, you're too late. Like it's going to happen, right? So you got 1, even if it comes back up to all-time high, 2, and then over here should have been your 3, but I mean there could be a 3 here, but really I would just take my bid from here. And that means, I mean, ultimately, like anybody trying to bid, they're gonna get caught with their pants down, right? You are gonna get caught with your pants down. So
Well, you know what they call that topping pattern?
which one?
The W. They call it the wombo.
Yeah. Like it's just something that occurs. Like every time SPY does a pullback, it does this, guys. Like, look at this. I'm not making this up. It's lower lows every single freaking time.
Will
No,
you got
that I mean,
Will
honestly,
Will
that
you
is a
got to
very
read
like
my
clear pattern.
Will you got to read my article that I wrote, my premium article. It's just literally about this pattern here.
It's insane. Like, I
Yeah.
don't know how people can sit there and be like, oh, guys, we're going to go to 8,000 SPY. No, you're not. No, you're not. It's not going to happen. I'm just telling you straight up. Like, I'm not even trying to be an asshole or anything. Like, this is an atypical pattern SPY has done throughout its entire history. You'll probably go to 8,000 later, but you're not going to do that right now. you're probably going to double top maybe from a higher high, but you're not. It's going to be an ABC. It's going to be a bear div into a play that's going to come lower. Your opportunity cost on SPY has always been historically wait for the second drawback. It's always been that way.
Max,
Send that out there.
come over to my chart real quick.
Go ahead though. Snorlax, my bad. Oh, or I guess.
No, just 2 seconds.
Yeah, there you go.
There's nothing else to say.
Is that a rocket? Is that a rocket ship?
Yeah, that's a rocket ship.
Oh, okay. I didn't know if it was a fish.
Oh,
a rocket.
What do you think about that, Will?
Bro, see, now you guys got me, and I'm wanting to let Snorlax go because I feel like I'm still on the stage. I agree, but look at mine. All right, switch to mine real quick.
I can't see yours. All right, Snorlax, you're going after this because
after this, Snorlax is up.
All right, I gotta stop sharing. So, are you on Will's?
Yeah, Will, you called that, by the way. You were talking to me about that. That was maybe 2-3 weeks ago. You were talking about.
We were sitting here at the low, bro. We were sitting here at the low. I was like, "This is gonna turn to head shoulders watch."
We got the receipts somewhere. I don't know where they are, but they're somewhere.
Oh, they're in the Discord. They're in there.
Yeah,
I posted it day by day.
Yeah, we got the outlook saved somewhere. Tommy, talk to me about crypto, man. What's going on here?
First of all, I was just gonna say that the DJI pattern is like the soul pattern if it were actually bullish. Yeah, Solana's going to single digits again.
Would you buy some side note? Would you buy Solana at $5?
No.
Really?
I don't know why I would.
Because it's going to 1,000.
I just don't like. I've already posted my whole bearish thesis on Sol, so I won't like turn this into a soapbox rant about it. But for one, for Sol to get back to all-time high, like its previous all-time high, the market cap is going to have to be much higher than it was in 2021, just because we've already had so many emissions, and we will have more emissions too by 2024, 2025. When some people hope that Solana hits all-time high again. As far as the crypto market goes, I mean, I generally think it's good for the long-term like cyclical health for the crypto market when Bitcoin dominance looks bullish, but it's very bad for USD prices typically when that happens. So, even if that's just in the capacity of Bitcoin sees upside, and when it pulls back, altcoins just get destroyed. You're seeing a lot of altcoins that pumped this morning retrace a huge chunk of their gains and break their market structures. On Bitcoin pullbacks of like 300 or 400 points. So it's not really like I'm going to say the same thing I said yesterday, whereas like the crypto market volatility within Bitcoin on like an intraday price action level is enough to like prohibit speculation in altcoins, just because there's just too much uncertainty in the market. And what's worse is that it's doing that because of a lack of liquidity on a lower time frame, but the actual like IV within the crypto market is near historical lows. So we haven't even really had an explosive move to the upside or downside. That will likely impact Bitcoin dominance pretty substantially. And yeah, I know, we've been talking about that for a while on this show this week, last week. I think that move's coming soon. Bitcoin dominance, Bitcoin dominance, Bitcoin dominance. I could say it as many times as I need to, but I really think Bitcoin dominance is about to have like a parabolic move to the upside. USD prices are the question mark.
So, okay. I won't put you. Okay, I'm going to put you on the spot a little bit. That's my job. I have to put you on the spot. We're here to make some content. We're here to help some people navigate the market. And guys, thanks for being here, by the way. We've got some really nice viewership today. I know we've got a lot to talk about, but thanks for hanging here. And if you're new and you've enjoyed the show, consider subscribing. We do this every single day, same time, sometime between 10 and 15, 10:15 and 10:30 a.m. Eastern time. So you've had fun, if you've learned something, if you've enjoyed just listening to us go back and forth, definitely consider subscribing. And please hit that like button for us. I know that apparently it does wonders for the algorithm, I've been told. But Tommy, we laid out a potential bullish case, or at least case for bullish continuation on equities. assuming we get a pause tomorrow and they don't go back to hiking and nothing breaks in the meantime, we know that historically speaking, there's a small window of opportunity where risk can perform extremely well. Bitcoin is risk. Bitcoin trades like leveraged S&P 500 or Nasdaq, depending on who you ask. It looks like we're sort of like dropping. The normie way to describe the TA would be like a falling wedge or like descending wedge. I know you don't trade those, neither do I. But my question would be, if we get that pause tomorrow and we do go for that double top in QQQ and SPY, even if there is very thin and a liquid
just freeze.
altcoin, even if there is really thin and a liquid altcoin books, you could be very correct on your Bitcoin dominance trade. What type of likelihood would you weight this scenario having? Bitcoin going to 35K and alts literally just ranging.
I mean, I place a certain level of probability on it. I don't know that I could like quantify an exact percentage, but something that we talked about, I think last week on Friday. I think it was Friday, because I initially thought Bitcoin dominance would start its breakout from a move to the upside. A stop run to the upside maybe on Bitcoin, blow shorts out, and then Bitcoin just bleeds, altcoins get smashed, kind of similar functionality to like the G candle where we did exactly that, massive upside and then just bled incessantly. Because I view the conditions similarly in that there's not really any demand for Bitcoin at the moment, at least not in the order books. We can talk about higher time frame thesis for Bitcoin. I'm very bullish on Bitcoin over a long time frame, but spot selling up here, and they've been selling. I mean, up here pretty much since we broke, basically since we broke back above new highs for the USDC FUD. So yes, I initially thought that Bitcoin dominance would rip higher because of Bitcoin going up, but I'm not sure that I would need to see some fundamental changes in the flow of things right now, which is, like I said, very heavy spot selling and longs bidding. And I truthfully, I still don't feel like we've ever had that puke below 24K that I've been talking about since like April. So, yeah, no, I mean, there's plenty of perp longs, and it almost feels like we're just chopping into bid support, chopping into bid support, chopping into bid support until eventually, you run out of support and you nuke everybody who bid support. And then, you puke. And what I think is going to happen is it will play out probably like 2019, where you get, I think we're probably going to puke lower, probably towards 22, 23K. And then the resulting bounce from that puke is going to be massive. And it's going to catch a lot of people with their pants down, especially on Bitcoin. Something where we go from 22, 23K back up to like 28 or 29, 30K even. I don't think we'll go to 30K, but I mean, that move would catch up every short with their pants down, expecting, a massive like continuation short breakdown. I think that might be something to watch as well. And that would help Bitcoin dominance too, Max, I think, because you would get like a mechanical bounce from shorts closing on altcoins, and you'd probably see an immediate crush on Bitcoin dominance. But as Bitcoin would squeeze, you'd see money pile into Bitcoin and try to juice all those shorts out. So, maybe that's what we get, but I think the end result's still the same. Dominance is going to go higher.
Yeah, I totally agree. I
But
totally agree.
we are getting into time. If you guys want to wrap things up, I know Wilt's got to run. Tucker, Max, Will, do you guys have any closing thoughts here before we wrap up?
I got to run, but I just wanted to show my Bitcoin chart real quick. This is just my thoughts. So, this is kind of where I think things are going for Bitcoin. So I think that we're kind of in a higher time frame distribution. I completely agree, Tommy. I think it just we're more rounding out here. You can see kind of the round in here where it's kind of like circling out. And I think what that does is that kind of plays higher. And this is just like your peak of your circle, right? And then you get your ABC down. And this is like your massive distribution over here back down to the lows of the circle, right? Which brings us right back down to that zone you're talking about, hits at 1920K just later. This is just my thoughts. Like this is what I think like can occur here. Not saying it will occur, saying can occur. I think it's the higher probability play. We do a falling wedge. I know not everybody plays patterns. That's fun. But the way I'm looking at this is a distribution on a higher time frame. It's just a more complex one, right? And that's the way I'm kind of viewing this right now, or at least I'm playing it that way, right? And then if it ends up invalidating, that's fine too. The invalidation will come down and it will actually be more structured. But if it plays like this will be the craziest distribution I've seen yet, right? This is the most round top position. Like when you take it all the way across, the most round top position you'll ever see. So this is just my thoughts, but that's all I want to throw in there, just so people kind of understand like what my thoughts are for the position for Bitcoin.
No, I appreciate it, Will. Bitcoin's kind of like the only asset for me it's just very, structurally, it makes the most sense to be bullish on. Everything else, I think, if we do see upside in Bitcoin, probably muted until Bitcoin runs first, or the other thought I have is whenever equities do get that pullback, if that's like 4,500 to 4,200, 4,400 to 4,200, people will bid crypto on that low with equities. That's kind of my thinking. But that would probably be after a big altcoin crush. And that would be very similar to 2021, where you had complete altcoin carnage into a big Bitcoin pump off the low, headed into the fall, off the back of equity strength. So, some interesting setups as always in this market. It's a slow market in terms of intraday volatility at times, or not intraday volatility at crypto for sure, but equities not the case. Never have a shortage of things to talk about though, which is cool. But we appreciate you guys so much for tuning in. As always, we'll be back tomorrow for another episode of Market Check, same panel. We'll also be back for Market Talk later today at 4:15 Eastern. Do we have a guest today, Max?
I believe we do. Sorry. Will left, so the OBS got all messed up here, so we can see like half of all of our faces. But let me just. Oh wait, he's back. Hang on.
Your Outlook. I can wrap it up. I can wrap it up quickly, so you don't have to fix it.
That's yeah. I can't even fix it. It'll.
All right.
This is funny. Wow, thanks, Will. You just had to leave 10 seconds too early. All right, let me see. I think we do have a guest today, actually. Let me just confirm. I know Wabi did a nice job finding some guests this week. Yes, we have today. We have Trader Mercury on at 4:15 Eastern time, so that'll be fun.
Nice, yeah, he's a great trader. It'll be good picking his brain. But yeah, guys, thanks so much for tuning in. We will be back tomorrow. Make sure to check out our premium content linked in the YouTube of this video, or the description of this video, as well as linked in the bio of our Twitter. That big yellow logo that you guys have become accustomed to, hopefully at this point. But yeah, I think that's all. I hope you guys have a great rest of your Tuesday, June 13th, 2023. Yeah, we'll be checking back in later today with some more thoughts on the market, breaking down CPI, and then obviously FOMC tomorrow. Have a good one, guys.